All right, we are back, everybody. Good morning to everybody today. Welcome to Tuesday, June the 1st, 2021. It's Bruce here with Stock Markets with Bruce, Uncle Bruce. Nice to have you joining me today. Hope you had a great Memorial Day weekend. Hope you got some nice weather in and you took care of yourselves, your family, and had some fun. And I hope you're all healthy out there. None of you are getting sick and you're getting vaccinated. Way to go. Should be a busy day today and a busy week. Sofi, 122, $20 call, selling for about $4.50. So they're in the money 66, 70 cents, and the rest is premium. And they've been in this 350, 380 premium range. That kind of makes sense right now, but that is pricey. You may want to look at 2250s for Sofi calls. You may want to look at those to get more at a lower price, better leverage. But you can afford these 450 to control 100. They're in the money, of course. They run to $30 a share. These are worth 10 plus premium, probably 12.50. You'll almost triple your money. So nothing wrong with that. Nothing at all. Looking at Vgac calls right now. What's your opinion on a better buy? Should I buy a 12.50 call October for October 17th at 75 cents bid, or should I get $15 calls for December 17th, 3 months later, 90 cents bid? Now there's an interesting dilemma, isn't it? Interesting. Well, I like the 1250s a lot because at only 75 cents, the stock goes to just $15. So you've got a $2.50 book value contract with probably a $1.50 premium. You got probably a $4 contract. That's a nice leverage. That's like 5 times your money at least. I would load up on those October 17s. The December's at 90 cents, I don't have a problem with them. It's just that it's $2.50 further away, where, if the shares go to $20 between now and September, say, you got a $7.50 contract plus premium. You already got an $8.59 contract. There's 12 times your money. You may roll out of those 12.50s. Once the shares reach that $15, $17 neighborhood, you might roll over into December exactly these at a higher level, but you'll be coming out at a much higher level. But the game plan would be for, let's say these 75-cent contracts turn into $4 contracts. What you might do is you might be acquiring December's or January's or February's for maybe $2. And you'll only buy as many calls as you've got now. So let's say you get 10 now, you'll buy 10 $2 contracts later and keep $2,000 off the table. So you're leveraging over into a future deal, but taking money out while you're doing it. And if those contracts go up to a higher level, you'll leverage those forward and take money off the table again and keep leveraging forward. And each time you're taking money off the table, diversifying your interests. So that might be your plan. All right. Vgac calls for 17.50, 15, 12.50, 10 for January. Do you believe that 23andMe would go above 20 by then? Why would you go for the 10 just guaranteed gains? Guys, I like the 23andMe merger with a Vgac. I always have. I've always liked it. I like the people involved. I like the people on the SPAC, Richard Branson and his gang. I like the people on the 23andMe side. I like all of the entities that have already funded 23andMe. $800 million has already been put into 23andMe over the last 10 years. I like every investment group that has put money into that deal. I love all of them. I love the fact that there's $950 million going into the treasury of 23andMe the minute they start trading. And the fact is that there's $500 million being brought in by Wall Street banks into this deal on a pipe financing. I love the groups that they've approached to raise that 500 million extra money, or 550, whatever that money is. I like every player on this deal. The players are all over the map on this deal, and they're solid senior Wall Street backers. This stock is not going to be $9.98 much longer. And on the open market, there is no reason to think that all of these players, all of these guys, every single hedge fund, mutual fund, pension fund, investment banking group, all of these guys all of them are figuring, well, it'll go to 18 and we'll be happy with that. They're not looking for $18 a share. They're not looking for $21 a share. Give me a break. These guys are looking for triple digits. They're looking for a 3 handle on this deal, 100 plus a share, and they're prepared to wait to get it. Are you prepared to wait and get it? I'm telling you, you get in here now because $9.98 is where it's being held at right now. The meeting is in 9 days. It's over in 9 days. It's all over in 9 days. After that, the stock will be called for trading as 23andMe on the New York Stock Exchange. It's not going to be here anymore. But you know what? It's up to you. What kind of skin have you got? How thick is the skin you have? Can you handle this? Can you take it? Can you buy call contracts on this stock at 10 or 12.50 and buy these January calls? Put the money on the counter. Pick up as many calls as you can afford to get your hands on and leverage yourself to 500 shares, 1,000 shares, 2,000 shares, 5,000 shares. Load up on these calls and then just do this. Fold your arms and just say, okay, I'm in now. I'm good till January. Show me. That's what you got to do. And that's what hedge funds are doing. That's what Warren Buffett does in his way. You've got to do it in your way. You have an opportunity with these SPACs that I keep recommending. You have an opportunity to leverage up the power of your portfolio into hundreds or thousands of shares rather than 10 or 20 or 100 or 200 or 500 shares. You can handle thousands of shares through contracts way down there, down to January, with the thinking that between now and about August, September, you might already be selling out these contracts. And it's possible that in many cases, you guys are going to sell calls at a stupidly wonderful price, and you're going to roll into brand new calls that are March, April, May of next year. And you're going to get calls there only using a fraction of the money you've just taken off the table on these calls that you've just made. You're going to get richer and richer and richer. You play this right. Just hang around and enjoy the show, guys. Bruce, what are your thoughts on selling a naked $10 put for a SPAC that's trading around $10 a share, collecting premium if assigned I own the stock at a discount? Well, if you are able to buy the stock at $10, and you don't get assigned, you cash in on the premium because you wrote the contract, you're going to take it in. Okay, go ahead. If you are happy buying the stock at $10 a share and you can afford 500 shares, $5,000 worth, write 5 calls or 5 puts. Take the dough. Yep, it's the same thing. It'll depreciate if the stock goes higher. It depreciates in value. You just gotta, your downside is that the stock goes down and you got to buy the stock at 10. Well, so you like the SPAC long term. You buy the stock at 10. You had to buy. You bought it. Now you start writing call contracts against it. Okay, get your money back on the put that you just lost money on and make a profit. You can always do that. Sure. Anyway, there you go. My bad, Uncle Bruce. Perry's. That's a 1750 SoFi call for October. That's up $300. And a $25 SoFi call for January. Now, should I close out the October and buy another January, or let that October run up a bit more? Okay. Let the October run up a bit more, like a lot more. You don't need to get into the $25 calls at this point. You run your 1750. Let this thing go to 25, 27 bucks and sell that contract at 12, 14. Take a shot. Run it. Take the money higher. And if you've got any spare cash lying around, and you can, if they're cheap, if the 25s are cheap, then buy some with cash. But otherwise, I would stay here with the 1750 because you're in the money now, and you're getting richer now. You're going to get richer now. Yeah, it's looking good, baby. I like that move. Hi, Uncle Bruce. Will it be a good idea to trade options in SoFi? I have a good amount of stock. I'll lose my money if the stock goes down. I will lose money if it goes down. Can I sell not to the stocks when I want to be holding the option? We're going to do trade options in SoFi. I have a good amount of stock. Lose money if the stock goes down. Can I sell or not the stocks when I want to hold the option? Okay. Oscar, I'm not exactly sure how you're asking me this question. So if you own the stock, you make money if it goes up, you lose money if it goes down. Simple. If you own options, you make money if the stock goes up, you lose money if the stock goes down. Simple. If you're writing options, if you are writing options against SoFi stock, which I don't recommend you be doing right now, you would bring option premium in right now, and depending on what the stock value is when the stock option expires, you will either have a gain of that premium, all yours, or you'll be exercised out if the stock goes too high. Uncle Bruce, thoughts on VGAC? Still a buy? Yes. The merger date is set for 610, I believe. Yes. What's a realistic price that you think this can run up to? Much, much more. Much, much, much more than this. It's a buy. Get it. Pick up call contracts for next December. Do that. Yes. Yes. Good. Very good. Positive. Buy. Happy. Nice. Great. Super duper. A-OK. Yeah. Brucey like. Thank you, everybody, for that. If you'd like to talk to me about a 1 hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.